We are conducting a webinar for charity. I am happy to announce that more than 5,000 people have already registered, and we have room to take another 5,000 people. If you have not registered, click on the link in the description. And if you want to know more details about the webinar, you can check this video. Hi, this is R Sundar. Today, we are going to discuss about IndusInd Bank results. Yesterday, after the market hours, IndusInd Bank declared the results. The profit was down by about 77%. There were so many people asked me through social media, "Sir, the result is very bad. Tomorrow, market will go down." I replied to them, there is no relation between corporate results and stock price move. Corporate results will affect the price over a longer period of time. In the short time frame, how many people have short, how many people have long, and that will decide the trend. To many people, I gave one example. Few quarters before, Bank of Baroda came out with the worst possible report in the Indian corporate history. They have declared 3,400 crore loss. But the next day, the market opened, Bank of Baroda shot up 25%. So, the day after the results, there is every possibility the stocks may go up after the bad results, or stocks can go down after the good results. But why? Why that behavior? Let me give you a real life analogy. Let us say you are expecting your brother to visit you. Your brother is coming from US. You are expecting your brother to give you a gift. You are expecting a car as a gift. But when he comes to your house, he is actually gifting you a two-wheeler. Definitely you will be disappointed. That is because you are expecting a car, but you just got only a two-wheeler. After a week, I am coming to your house. You know, being an option seller, we always like to take money from others. We never give money to other people. You are not expecting me to buy anything for you. But when I come to your house with 1 dozen of apple. You are so surprised because you did not expect anything, but you got some apples. So you are so pleasantly surprised and you are so happy. And look, 50,000 rupees of motorbike gives you sadness. 500 rupees apple gives you the happiness. So does it mean that 500 is bigger than 50,000? Surely not. So it is not 50,000 or 500, but it is what you get versus your expectation. So the same way in stock market, when a company is about to declare the results, say for example IndusInd Bank, everybody was expecting 90%, 95% fall in the profit. And everybody was bearish. Nobody was expecting good result. So they have already shorted heavily by expecting the very, very bad result. But when the result came, the profit was down by 77%. Profit down 77% is bad. There is no doubt about it. But the people were expecting 95% drop in the profit. That is why they have shorted it. Today when they saw, though the result is bad, but it is better than their expectation. So they started covering the shorts. Once they started covering the shorts, the stock started moving higher, and it moved higher and higher. At the end of the day, it closed about 15% higher. Same thing has happened few quarters before in case of Bank of Baroda, which has shot up 25%. So that is why playing with the stocks on the day of expiry is very, very risky. So this is the first part. Now I'm coming to the second part of my discussion. I've given a strategy yesterday. IndusInd Bank, sell call option 400, sell put option also 400, and buy 500 call and 300 put for the current month. So these kind of strategies has their own advantages and disadvantages. That is why we have put up a disclaimer that this is a strategy we are giving, and you, for the purpose of education we have given, and if you want to follow, you know the risk and you consult your financial advisor. You may be curious to know what I have done, because I have also taken those positions. So what I have done, whenever we take a position, if it is going in the right direction, if you are making profit, we enjoy the profit. But if things go wrong, we do lot of adjustment trades. Then you may ask one question, sir, what are those adjustment trades? We cannot tell those adjustment trade straight away without knowing how much additional capital you have. There is every possibility we do an adjustment trade, even that adjustment trade will also go into some problem. So we do another adjustment trade. So therefore, options trading is not about the strategies. Options trading is about managing the money. How much money you have, what percentage of money you deploy, what percentage of the money you are keeping it buffer, and how you are going to do the adjustment trade. And there are so many ways one can do adjustment trade. Maybe if you are interested, at the end of the month, I will show you how I come out with profit. But all those adjustment trade, if I want to explain, it will take at least 4 to 5 hours, and which is not possible through YouTube. And in fact, we conduct workshops in various cities. Our main topic is these adjustment trades. So we teach in the workshop. So if you want to know all the adjustment trades, then you must consider attending our workshop. So until then, if you do not know adjustment trade, and if you have no additional capital, what you can do, the only thing you can do, you can keep a stop loss in your mind, and you have to exit when that stop loss hits. What happened when I was young, I was traveling in a motorbike. I was going to a particular town, but I really don't know the way to go to that town. In front of me, there was a bus. The bus is going to the same town. So it was written on the bus. I thought it's very simple for me. I just follow the bus. I can reach the destination. So the bus was going, and I was following the bus behind the bus in a motorbike. What happened? On the road, so there was a pothole. It fits in between the two wheels of the bus. So the bus driver knows that he will not be falling into the hole. So he continued to move with the same speed, and he crossed the hole. But I was following the bus, behind the bus, in between the two tires of the bus, and I fell into the pothole. So the moral of the story is that you cannot just follow somebody blindly unless you have the same capability of the person you are following. So therefore, my conclusion is that If you want to learn adjustment trade, you might consider attending our workshop. And if you have got no additional capital and you do not know how to do the adjustment trade, the only way for you is to keep a stop loss and exit. Hope this information is useful for you. Thank you for watching.